All right, welcome to this explainer. Today, we are going to tackle the world of digital assets. And look, I know it can seem super complex, but I promise by the end of this, we're going to make it all feel clear, understandable, and something you can actually wrap your head around.
Okay, so here's how we're going to do it. We've got a four-part game plan. First, we'll start with the absolute basics. What even is an asset? Then, we'll dive into the crazy world of the crypto lottery. After that, we'll get into the nitty-gritty of gains, losses, and yes, taxes. And finally, we'll wrap up with a simple strategy that cuts through all the noise.
So, first things first, before we can even touch digital assets, we've got to be on the same page about what a plain old regular asset is. We're really starting from square one here.
And honestly, it's that simple. An asset is just anything you own that has some kind of monetary value. That's it. The whole point of owning assets, really, is hoping that their value goes up over time, which, grows your net worth.
And this really breaks it down perfectly into two main buckets. You've got your physical assets, stuff you can actually touch, right? Like your car, a house, even that pressure washer in your garage. But then you have digital assets. And here's the thing you have to realize. Most of us already own these. The money in your bank account, that's just data. Stocks, also data. Bitcoin is just the new kid on this digital block.
Okay, so now let's talk about the thing that gets everyone so excited, and let's be honest, a little bit confused. Let's talk about the crypto lottery, that wild, high-stakes dream that pulls so many people in.
Wow, just look at that number, 35,000%. That is the kind of mind-blowing return you could have gotten on Dogecoin in just 1 year. This right here, this is the dream that fuels the entire frenzy. It's that idea that you could become a millionaire overnight if you just pick the right coin at the exact right moment. But, and this is a huge but, for every one of those lottery winner stories, there's a much, much harsher reality. The dream is to get rich quick. The reality, for so many people, is what happens when you trade based on pure emotion and hype. They often end up losing 80% of their money. And then, in a panic, they lose the last 20% trying to get it all back. Let's call it what it is. It's not investing, it's gambling. So if you do decide to jump into this world, there are two things in life that are certain, right? Death and taxes. Well, in crypto trading, it's losses and taxes. You just can't avoid them.
This is probably one of the biggest reality checks out there. So let's say you do it. You hit the jackpot, your coin goes to the moon, and suddenly you have $1 million. Guess what? You are not a millionaire yet. Not even close. That profit is called a capital gain, and the IRS is waiting for its cut. Your real profit is what's left over after Uncle Sam takes his share.
Okay, but what if things go the other way? What if you lose money? It happens. And as strange as it sounds, there might actually be a little bit of a silver lining in that situation. And here's how that works. The government actually lets you use those losses to your advantage. It's called claiming a capital loss. You can use it to cancel out other investment gains, and you can even use it to lower your regular taxable income for the year up to a certain limit. So yeah, you lost money on the trade, but you can get some of that value back by lowering your tax bill.
Okay, I know. All this talk about high-risk trades and tax loopholes, it sounds super complicated. Because, well, it is. But the final, and I think most important thing to remember, is that building wealth does not have to be this hard. And I love this quote. The point is, you can just choose to skip this whole high-stakes game. You don't have to risk all your money on some sketchy coin you heard about online. There's a much more predictable, much more reliable way to do this. So what does that simpler path look like? Well, if your main goal is just safe, predictable growth over time, you can't go wrong with total market index funds. You're basically buying a tiny piece of the entire stock market. But what if you still want a little piece of the digital asset action? There's an answer for that too. It's called an ETF. Think of it like a basket that holds a bunch of different investments. Some of these ETFs now hold Bitcoin right next to regular old stocks, giving you that crypto exposure but in a much more stable, regulated way.
At the end of the day, it all comes down to this one question. You have to ask yourself, when I put my money into something, am I actually investing based on a real strategy? Or am I just closing my eyes, rolling the dice, and hoping for the best? Seriously, understanding the difference between those two things, that might be the most valuable asset